John Clifton Bogle did not set out to become a legend. He wasn't born into wealth, nor did he fit the Wall Street stereotype of the charismatic market-beating genius. Instead, his rise began with a simple yet revolutionary idea, an idea so powerful and so disruptive that it changed investing forever. Most investors should not try to beat the market, they should simply own it. To understand why this philosophy was groundbreaking, we must travel back to the mid-20th century, a time when Wall Street was dominated by elite institutions, exclusive brokers, and high-cost, actively managed funds promising market performance that almost never materialized. Investing was a game of arrogance, the belief that professionals could consistently predict which companies would rise and which would fall. That belief made them wealthy. But ordinary investors? Not so much. John Bogle observed a shocking truth: most mutual fund managers underperformed the market, and they charged high fees for the privilege of doing worse than average. This injustice lit a fire inside him. While studying at Princeton University, Bogle wrote his now famous thesis on why mutual funds fail, identifying a core enemy to investor returns: costs eat profits. Every fee, every transaction, every attempt to outsmart the market was chipping away at the investor's wealth like silent termites inside a tree. After graduation, Bogle began his career at Wellington Management, where he quickly rose through the ranks. He was sharp, analytical, and bold enough to challenge established thinking. But after a strategic business mistake, a merger that later crumbled, he found himself fired. Many would have accepted defeat. Bogle turned it into destiny. In 1975, he founded a company that would become one of the most influential financial institutions in history, the Vanguard Group. Unlike traditional firms, Vanguard wasn't designed to enrich executives. It was structured to be owned by its investors, making profit for them, not from them. This alone was a radical shift, but the real earthquake came with the product that Vanguard launched in 1976, the first index mutual fund for retail investors. While the idea sounds simple today, its introduction was met with ridicule. The financial industry mocked it and sneered, "Who wants to be average? Losers fund." Articles and newspapers actively criticized Bogle. Competitors laughed. Wall Street hated anything that threatened their fear-rich empire, but Bogle was not trying to be a hero, he was trying to be fair. His belief was that the market's overall performance, powered by capitalism itself, was already strong enough to grow wealth. Why gamble on which single company would win when you could own the entire stock market? And at the core of every index fund was Bogle's ultimate investment commandment: costs matter. To Bogle, cost efficiency wasn't a marketing slogan. It was a moral stance. He believed that every dollar paid in fees was a dollar that would no longer compound for the investor's future, their retirement, their family, their freedom. His mission was to let compounding do its work with as little interference as possible. Though mocked at first, the world soon changed. The data became undeniable. Index funds, with lower costs and stable performance, began outperforming expensive active funds. Ordinary investors, teachers, workers, parents, suddenly had access to a strategy once reserved only for the wealthy. The walls of Wall Street had been breached, and behind this financial revolution stood a quiet man with glasses, a calm voice, and an unshakable belief in democratizing wealth. A man who insisted that capitalism should benefit everyone, not just those who designed the system. A man who dared to tell investors the truth: don't look for the needle in the haystack. Just buy the haystack. Bogle wasn't promoting laziness, he was promoting simplicity backed by mathematics and decades of empirical evidence. He often argued that the enemy of long-term wealth is not poor performance, but investor behavior fueled by greed, fear, and excessive trading. Index investing was the antidote, a disciplined, rational approach free from emotional chaos. It didn't take long for financial experts to change their tune. Nobel Prize-winning economists and behavioral scientists joined Bogle's side. Research institutions confirmed that index funds built wealth more reliably than actively managed alternatives. Slowly, the mockery turned into admiration. Vanguard grew into one of the largest asset managers in the world, controlling trillions of dollars in assets, and John Bogle? He never collected the billions he could have claimed. He dedicated his legacy to serving the investors, not exploiting them. Today, index funds are the foundation of retirement accounts across the globe. Millions of people investing in their future are living proof of Bogle's quiet revolution. The man who was once called a fool became known as the father of the index fund and the investor's best friend. But how did Bogle's philosophy evolve into a global movement? How did he convince the world to trust simplicity over speculation? And what can we learn from his principles to strengthen our own financial futures? To answer those questions, we must dive deeper into the core ideas that define John Bogle's life mission, ideas that continue to reshape the investment world even years after his passing. Stay with me. Because the story of John Bogle is not just about money, it's about fairness, discipline, and empowering everyday people to build wealth through patience and wisdom. And in the modern age, where noise and speculation dominate the markets, Bogle's principles may be more essential than ever before. The Bogle philosophy: simplicity, discipline, and the empowerment of everyday investors. To truly understand John Bogle's influence, we must step into the mindset behind his mission, a philosophy built not on prediction, excitement, or speculation, but on a quiet devotion to mathematics, fairness, and the power of ordinary people. While Wall Street saw investing as a battlefield where only the strongest minds survived, Bogle saw it as a partnership between capitalism and the long-term investor. He believed every household deserved a chance to grow wealth, not through genius, but through common-sense discipline. The foundation of Bogle's philosophy rests on a startling but truthful observation: the stock market is already designed to build wealth over time. Trying to outperform it is unnecessary, and usually self-destructive. This isn't pessimism, it's reality supported by overwhelming evidence. The market, over decades, reflects economic growth, business innovation, and human productivity. Historically, it rises. The problem is not the market, it's our behavior. Investors consistently sabotage themselves by chasing trends, reacting emotionally, timing the market poorly, and trusting flashy promises instead of long-term strategies. Bogle argued that success in investing isn't about brilliance. It's about character. In his own words, time is your friend, impulse is your enemy. So what exactly are the pillars of the Bogle philosophy? Let's break them down clearly and powerfully. 1. Own the entire market instead of betting on which company will win. Bogle believed investors should own all companies. When the economy grows, your wealth grows. When a sector falls, another rises. Diversification is automatic and constant. Risk becomes manageable. This eliminates the need for prediction and knowledge of every financial twist and turn. 2. Keep costs low. Bogle was obsessed with minimizing fees. He famously compared investing costs to friction that erodes wealth. Active fund managers may charge 1 to 2% annually, small numbers, right? But over 40 years, that difference can wipe out over 60% of investor returns. Bogle declared financial war on those tiny percentages that steal dreams. 3. Be patient and let compounding work. Bogle considered compounding the eighth wonder of the world. Every reinvested dividend and every fraction of growth builds on itself silently. You don't feel its power in the early years. But over decades, it becomes unstoppable. He urged investors to do nothing, not because they were lazy, but because interference destroys compounding. 4. Avoid speculation and emotional decisions. Market bubbles, hype stocks, financial news headlines, these temptations distract investors from their long-term goals. Bogle believed that the single greatest danger to wealth is human emotion. Fear causes selling at bottoms. Greed encourages buying at peaks. Index investing protects you from yourself. 5. Invest for the long haul. No shortcuts allowed. Bogle dismissed trading as gambling dressed up in fancy suits. He wasn't looking for quick riches but true financial security, the kind built slowly and steadily, year after year. He summarized his ethos perfectly: the goal of the stock market is to do nothing at all, and still make money. This philosophy wasn't theoretical. It transformed lives. It brought investing power away from the elite and placed it into everyday hands: teachers saving for retirement, nurses building future wealth, young adults starting early, families securing financial independence. These weren't stock-picking experts. They were normal people, finally given a fair chance thanks to a system that worked for them, not against them. Yet Bogle knew that empowerment required education. He became a teacher as much as a pioneer. He wrote books, gave speeches, and challenged dangerous financial myths. Among his teachings, one message echoed the loudest: don't let Wall Street convince you that complexity equals intelligence. Simplicity wins. Index funds aren't sexy. They don't create thrilling stories or overnight millionaires. They don't promise to beat the market, they are the market. And that's the point, they make capitalism work for the investor, not the casino. While many mocked him early on, over time, millions embraced this simplicity. Investors began shifting away from expensive funds. Institutions, retirement accounts, pension systems, all turned toward indexing. The financial industry was being reshaped from the inside out, and it didn't stop there. The Bogle philosophy ignited a movement, the Bogle Heads, a global community united by the belief that investing should be transparent, rational, and available to everyone. These people are everyday investors who study Bogle's teachings, share knowledge freely, and help others escape the roller coaster of speculation. The irony? Bogle, the champion of average market returns, helped millions outperform the professionals who mocked him. He became the humble revolutionary who defeated the kings of Wall Street without ever engaging in their games. But while Bogle's message spread, he continued his advocacy for fairness and ethics in finance. He fiercely criticized conflicts of interest, unjust fees, and firms that prioritized profits over investors. His enemy was not the market, but the greed within the system meant to protect it. As he aged, Bogle became something even greater than a successful reformer, a protector of the financial future. He showed that wealth building does not require privilege or prediction, only discipline and trust in time. Through his work, Bogle restored a fundamental truth: investing is not a competition. It's a journey toward financial dignity. The miracle of compounding is like watching a tree grow. It takes time. His voice was steady. His message was simple. His impact was massive, but one question remains: if his philosophy is so powerful, so undeniably successful, why did it take so long for the world to embrace it? The answer lies in part 3, where we uncover the global shift that validated Bogle's ideas, and how his revolution continues shaping the future of investing for generations to come. The Global Indexing Revolution: how John Bogle changed investing forever. As the 21st century unfolded, the world finally began to understand what John Bogle had long believed: there is no smarter strategy than owning the entire market at the lowest possible cost. The shift wasn't sudden, it was a quiet revolution driven by undeniable evidence. Study after study proved that index funds, on average, beat the majority of actively managed funds over long periods. Investors who embraced Bogle's philosophy of patience and simplicity were steadily outperforming the professionals trained to conquer the markets. While active funds continued to chase short-term performance, index funds marched forward like a powerful engine, slow, steady, unstoppable. And as confidence grew, the numbers exploded. In the early days of Vanguard, the index fund barely attracted $11 million in assets, a devastating disappointment. Today, indexing commands trillions of dollars across global markets. Vanguard has risen from a mocked experiment to one of the largest financial institutions on earth. And all of it, every dollar, serves investors first, just as Bogle designed. But Bogle's success wasn't just a triumph of investing strategy, it was a moral victory. He exposed an uncomfortable truth that shook the financial world: Wall Street profits when investors fail. High costs, constant trading, and unrealistic promises weren't design flaws, they were business models. Bogle flipped that model upside down. By eliminating incentives for excessive fees and speculation, he forced the financial industry to confront its own misalignment with investor interests. He gave the average person a defensive shield against the system itself. Bogle's principles didn't stop at indexing, they became a broader philosophy for living well and thinking responsibly about money. His famous Bogle Principles became a set of rules not only for investing but for financial wisdom: spend less than you earn. Save regularly. Invest efficiently. Keep it simple. Stay the course. These rules didn't just build wealth, they built character. He believed money should serve life, not rule it. Financial independence wasn't about greed, it was about freedom. Yet Bogle's approach required something many investors lacked: patience. In a world obsessed with instant gratification, he demanded long-term thinking. He asked investors to resist panic when markets crash, and resist euphoria when markets rise. To him, discipline was the ultimate edge. Not intelligence. Not timing. Discipline. Bogle's teachings have become even more vital today, where technology amplifies noise, and financial influencers promise overnight wealth. Instead of empowering investors, modern markets bombard them with distractions: cryptos skyrocketing, meme stocks trending, speculative trading becoming entertainment. John Bogle would shake his head and remind the world, don't do something. Just stand there. His message remains a powerful counterforce to a chaotic investing culture. And as investors increasingly seek stability, clarity, and fairness, Bogle's philosophy continues to rise. Bogle's fight wasn't only financial, it was deeply personal. In 1996, he faced a life-threatening heart condition and underwent a heart transplant. Most people might have retired. Bogle returned to work, stronger, more determined, more outspoken. He spent his remaining years advocating tirelessly for the small investor. Even after retiring from Vanguard, he refused to leave the mission behind. He founded research institutes, wrote best-selling books, and became a trusted public voice for investor rights. As indexing spread around the world, so did Bogle's influence. Pension funds in Europe adopted indexing for stability. Asian markets integrated low-cost passive strategies. Governments, academic scholars, and economists praised Bogle's contributions to financial equality. One Nobel Prize-winning economist famously said, "John Bogle has done more good for the investor than any other person alive." Yet, through all praise and success, Bogle remained remarkably humble. He never claimed genius. He never celebrated wealth. Despite leading one of the world's largest financial firms, his personal fortune was smaller than nearly every other CEO in the industry. Why? Because he refused to profit from investors. Vanguard's structure ensured that excess earnings always went back to its shareholders, the investors themselves. In a world where billionaires build empires from financial power, Bogle built trust. That trust became a legacy far greater than riches. He died in 2019, but his principles, his revolution, continue shaping the world. You may not realize it, but if you invest in a retirement account, a pension plan, or a simple low-cost index fund, you are living the John Bogle legacy. Every dollar in your account compounding quietly is another victory for his philosophy. Every investor freed from speculation is part of his revolution. Every future secured by patience and discipline is proof that Bogle was right. Today, indexing is not seen as the average strategy. It is the gold standard. The dominant force. The blueprint for long-term financial success, and it all began with one man willing to challenge the most powerful industry in the world. One man who believed that wealth should not be a privilege of the elite. One man who measured success not in profits, but in the number of lives improved. John Bogle didn't just create a financial product. He created a movement. He protected investors from deception. He democratized wealth for generations. He changed the world, quietly, humbly, and permanently, and now, his legacy lives in every investor who has the courage to embrace simplicity, patience, and discipline. That investor could be anyone. That investor could be you. So ask yourself, will you chase the noise, or will you trust the numbers? Will you gamble, or will you grow? Will you let the market control you, or will you own the market, as Bogle would say? Stay the course. Because financial freedom does not belong to the fast. It belongs to the patient. And so, the legacy of John Bogle reminds us of a timeless truth: investing doesn't have to be complicated, expensive, or limited to the wealthy. The path to financial freedom can be simple: stay the course, keep costs low, and let compounding do its magic. If Bogle's message teaches us anything, it's that every investor deserves a fair chance to grow their wealth. If you found this story inspiring and want to continue learning the strategies that shape real financial independence, make sure you subscribe to our channel. Join us as we explore more powerful ideas, legendary investors, and the secrets behind long-term success in the markets. Remember, smart investing isn't about luck. It's about knowledge. It's about discipline. And it's about staying the course. Thanks for watching, and welcome to a smarter way of investing. Subscribe now, and I'll see you in the next video.